and welcome to GFG Resources Live Investment Summit today, hosted by Six. I'm joined today by Brian Skanderbeg, President, CEO, and Director of GFG Resources. He's going to be walking through a company presentation today, and after, we're going to be accepting questions live. Feel free to submit them in the Q&A panel found on the right-hand side of your screen at any time. And as always, this summit is being recorded and is going to be available to watch afterwards on Six.com in the coming days. So be sure to look out for that. Brian, without further ado, I want to hand things over to you to get us started.
Thanks very much, Cam, and thanks everybody for joining us today. Today I'm going to talk about GFG Resources, and I'm going to introduce our context for the assets in Timmins. Bit of background for myself, Brian Skanderbeg. I'm the founding CEO of the company, and we've been public for about 6 years. Focus of today's presentation is really on the Montclair project drill results that we put out yesterday. Great results. I'm going to walk you through what they mean, where we think we can go with these things, and also about plans for 2023. When we think about GFG, it's a really interesting company. We set this up 6 years ago. I think we've got an exceptionally strong team and board of directors and a team that's been in the sector for, literally decades and had a lot of success behind us. The thesis we set ourselves up to be is really driving discovery. And when we think about this in our strategy, it was putting together district scale opportunities. Several of those are in Timmins. We've got some assets in the US. And ultimately, what we're trying to do is find world-class systems in Tier 1 belts. And it's an easy thing to say and a difficult thing to do. What I'm going to talk to you a bit about today is also our strategies. And ultimately, those really drive where we're focused. When we think about our corporate snapshot, and before I go into the technical details, a bit on GFG as a whole, we trade on the TSX. We also trade on the OTC. Symbols GFG and GFG SF in the US. We're right around this sort of 25 million market cap company. Looking back at Q4 last year, we had about $2.5 million in the bank. One of the things I'm quite proud of is exceptionally strong shareholder base. Insiders have always participated and backed this company. Myself is certainly one of the larger shareholders. Alamos Gold, one of the most reputable mid-tiers out there, believes in this team and is a very strong and supportive shareholder. 1875 Lundin family, other institutions, US Global, Delbrook, these are very strong and seasoned investors. Looking at the chart, I think if you're on this forum, you've probably been in the gold space a while, aware of how difficult it was moving through H2 last year. And that slide in GFT stocks really did mimic the TSX venture stage in many of the gold companies. What you're seeing in Q1 this year, very different. Price breaking out, many of the equities moving up more strongly, good strong news flow, feels pretty good. So I think GFG today and yesterday is broken out where we are at the base, and chart looks great. Great people, as I said, involved. Patrick Downey, Brian Booth, Arnold Klassen, and Lisa Riley are board of directors. These people are all extremely savvy and have been in this space for a long time. When we think about gold, and before I go into exploration, it's why gold, why now? I think 2023 is going to be a year where we do break all-time highs and continue to move through. Today we're approaching 2,600 Canadian, and these are extremely strong metal prices. I think the sector has a lot of value to be unlocked, and I'm really optimistic that we see a really strong market for the gold space this year. Inflationary times of conflict. Gold has broken through, and ultimately even the central bank buying is an extremely strong sign, and we've seen that for the last several years. That's the why gold thesis. I'm an explorationist. Why exploration? And I think about this in terms of why we set up GFG and where we're going with it. And the truth is, exploration has become more difficult with time. And as an investor, you have to find teams that have had success and are looking to do things differently. I think GFG is one of those teams. We put big blocks of ground together. We understand the history of exploration. We're applying new technologies. And ultimately, I think we're one of the teams that can make these relatively few discoveries that are being found these days. Up on the upper right of this table is the trends of exploration, and you can see these declining exploration trends. And ultimately, that just supports the thesis that metal prices have to be higher. Reserves and resources aren't being replaced. Asset competition is very fierce. These are all driving the rationale to why to look at gold exploration. And I really feel GFG's got a great team, a great track record, and some very solid assets. When we think about our portfolio, GFG's focused on Timmins for the last 4 years, and we've amassed an extremely strong and formidable land position. It's about 800 square kilometers. 3 main land positions, Penn and Doré, west of Timmins, and more recently Gold Arm, which is the focus of today's presentation, out east of Timmins. But just to give you history of this belt, it's about 140 million ounces of gold in this map. It's one of the most endowed pieces of crust on the earth, and ultimately looking at that endowment is where we as explorationists decide focus on where we want to go. So Timmins, high endowment, good history of discovery. So when I look at the history here, there's lots of new deposits that have been found in this last cycle, and it's been found because there's lots of till cover here, and I believe there's lots more to be found. The other thing we look strongly for is infrastructure, natural acquirers. So this belt is extremely rich in infrastructure, and I think there's going to be more and more infrastructure going into this belt. The likes of Cote, the likes of the Newmont infrastructure, Agnico's infrastructure, McEwen, Alamos. These are all mid-tiers which are leveraged and own infrastructure in this belt. So here we have an area which is A, high endowment, B, infrastructure rich, C, preserved endowment because of the extensive till cover. And these are the reasons why GFG is focused here. There is a need for feed. We put it on the bottom of this slide. I think the majority of the mills in this camp have ability to either take on more feed or certainly displace marginal feed. And that's a great sign for discoveries. So these are the reasons why GFG is focused on Timmins. When we look at a little more granularity going east of Timmins, this is a really fascinating belt. The Porcupine Duster going out east of the main Timmins camp, the Pipestone Fault Zone moving out east of Timmins as well. These both host major multi-million ounce systems and infrastructure along them. When we think of what GFG has amassed here over the last kind of 12 to 14 months, it's about a 30-kilometer trend. We're in pink at the top of this map. We extend across the entirety of the Pipestone Break for about 20 kilometers. We also have the North Pipestone Break abutting High Gold on the east and moving over towards the owners of the Clavels mine to the west of us. Great land position. It's along the Pipestone Belt. I'm going to focus most of my talk on the Montclair gold system, and I'll come back and revisit where we are regionally. Significantly, infrastructure south of us. In main Timmins camp, you've got Pan American and Newmont, you've got Agnico and McEwen, and then going out to the east of us, Moneta and Van Gib. These are assets that are flanking our land positions just off to the east. I really am convinced that you're going to see major infrastructure and continued build of infrastructure within this map zone, servicing some very large deposits that will come to development. GFG stepped into this land position with the acquisition of Montclair, and that was about 14 months ago. We started with a 10-kilometer segment, and we acquired this from a private company called IEP. It had about 120 holes in it. When I look at this map showed a good gold system, and it showed a system that was underexplored, and it showed systems that we could grow. There was 120 holes here. Most of those were prior to 1965, pre-43-101, really just focused on the shallow, higher grade component of the system. But for us, it was like a great sign to say, there's a system there. It's underexplored. It's a great place to start. So what I'm going to walk you through is where we've taken this system since acquiring it. I'll focus most of my time on the Montclair, the MC corridor, which is the northerly of these two, but I'll also touch base on the Canamex, which is the southerly of these two. This has been our journey over the last 14 months, and it's been quite a ride, as you can see in the share price graph. But one of the things I would try to bring home is that we've been very newsy. We've put more press releases out over the last 12 to 14 months than we have at any point in our history, and we've been very reliably generating news with economic hits that I think will translate into resource. You can see the upward swing that was triggered yesterday with the press release and where we can go. I think you could easily see the stock moving back up into the ranges that are 20-25 cents. I'm optimistic we can keep the news flow going with very positive results. Now, when we think about Montclair, this is a map blowing up of what we started with in that first phase of drilling. I'm taking us back about a year. The gray holes are the historic holes. The black holes on this map are ones drilled by GFG in Q4 2021. This is really the first kick at it. And we came out here, we drilled about 3,200 meters and 14 holes. And what we were able to do was quite astonishing. We hit the best hole ever drilled on this property on hole 5. It was 5 grams over 26 meters. Extremely strong and compelling mineralization at shallow depths, 100 meters depth. We built the solids. You can see on the right here, you see how we started to interpret these shallow north dipping vein systems and the arrays of continuity, building our understanding of the system, and then drilling a few holes deeper to say, what's the depth down below 200? What's it look like at 300? What we found was that economic intercepts from as shallow as 50 meters all the way down to kind of 250, 8 over 8, 5 over 25. These were all holes from our first program and were very, very compelling and interesting to us. When we think about the character of some of these systems, and the part that I like most about it is this isn't an extremely high nugget system. And by that, I mean we got grade reliability. It's a good thing for gold. So lots of sort of 5, 10, 15, 20 gram material, good continuous hits, stacked lenses, both bulk tonnage and high grade. So in this particular hole, you can see a high grade interval that was 5 grams over 26 meters. Further above that, structurally, you see some of the shallower felsic-hosted mineralization that's sort of in that gram and a half range. So we were very compelled. This is things we drilled almost a year ago. We came out in 2022, and we were pretty excited because we just published some great drill results. We published a budget for 2022, which was in that sort of $2.7 to $3 million range. And it was always designed to drill 8,000 to 10,000 meters through the year. What we were successful in doing was drilling 17 holes in the first phase of it. Not only did we step out and drill or continue to drill in the MC Central panel, and these red highlights are all GFGs, but we also stepped out laterally, both to the east and west and down to the Kanamax trend. And we saw mineralization in all of these target environments, generally only testing the system quite shallow, but we had lots of economic intercepts. If I talk to you a bit geologically about what we were successful in doing last year, you've got this 5 over 5, 5 over 8. These were all part of the 1.6 grams over 70 meters. Good vein systems, good reliable grade. And these were published as part of the 2022 phase 1 program. What I'm most excited about today and what I want to focus on, though, is about what we published yesterday. And yesterday we published the initial results from our phase 2 2022 program. Just to revisit that, what we did last year was we started drilling in about October. We drilled through to mid-December. That was a 17-hole, 3,500 meter program. And it was really designed both to infill and grow the MC Central panel, take step out holes, bold step out holes along strike, and then start testing the region. We were very encouraged by what we saw in the drilling, and what we saw was some very interesting assays come back in the initial holes of this program. What we published yesterday was the best intercept we've drilled on this program to date, on this property to date, and I say that from a gram meter product perspective. 10 grams over 16 meters is very compelling. It was a step out on the 5 grams over 26 meters down dip. And what we saw here was a very good, reliable grade intercept. And by that, I mean, peak assay was in the sort of 30 grams, 35 gram range, 10 assays above 10 grams per ton. So it gives you really good reliability. And it links directly to other high grade intercepts that we had. And if I tried to, I'd like to maybe draw a little bit of our interpretations here. So when we think geologically, this footwall environment here, these are mafic volcanic rocks, high iron, high titanium basalts, really reactive rocks. They're a great host rock for gold. So we're seeing strong continuity in this footwall trend. We're seeing high grades. We're seeing a linking to the mineralization that also hosts in the felsic volcanic material. So what we see is these domains that are generally shallow are coming across the felsics, and we're seeing the blowouts and much thicker sections on these intersections. So we've always felt there was this dual structural control in this in this setting. And I think the more we drill, the more we understand it. What I'm very encouraged to see is that we're still at a very shallow depth. The hole we published yesterday, the best hole, was literally 100 meters vertical and remains open at depth. It does directly show us continuity in a very interesting setting. And I show you a few slides down here to show you what the mineralization looks like. This would be something that ran about 10 grams per ton, 10-15% sulfide, very intensely altered mafic volcanic rocks, and good grade reliability. One of the things we're also keen on, though, is these deeper footwall systems. So I expect to see more of these with depth. And we have indications of those, and we have some holes that have come through that we're waiting to pending assays on this. So not only will we prove the strike continuity and of the upper footwall zone, which is really in this environment, but we have a number of holes that have been completed testing the deeper environment and also testing the felsic main zone hanging wall style mineralization. Now, that was within the MC Central panel. And I'm encouraged to say that we have a lot of assays pending in that area. And I'll just circle some of the holes that we have pending back in this environment. These would be the deep MC Central. We have holes pending in this environment. There's 4 holes that are pending in that step outs to the east, which we're kind of infilling, drilling down to kind of a 50-meter spacing. Visuals on both of those look very encouraging. So I'm optimistic we can continue to publish good results in the MC Central panel. To me, as an explorationist, it's always fascinating to take big, bold step outs and say, what's out there at the edge of our system? Where is the edge of our system? We drilled this hole last year, and it looked interesting. We recognized that the mineralization was relatively narrow, but we did see the same hallmarks system out there. Peak acid was about 5 grams. And we always knew we were going to go back there, given porphyry's present, the right stratigraphy in terms of its chemistry and the characters. So we drilled this hole out here back in Q4 of 2022. And we're still waiting on assays for this one. It was one of the latter holes we drilled. I think we completed this thing on December 21st, much to the chagrin of the drillers. But in the press release we put out yesterday, we talked about visual encouragement, both within the MC Central panel, but also at depth. So I'm going to show you some slides today and some core photos. These are of the interval, the hole that is literally a kilometer to the east of us. Very, very fascinating textures we're seeing. When I see things like this, I see a very altered host rock. This was a mafic volcanic rock. I see an intense sulfidation, overprinting veins in a number of areas. And this is all very encouraging. When I talk about the mineralization, what we've seen in here is multiple zones that are kind of 6 to 10 meters in width, strong sulfidation, good veining. Looks very similar to stuff we see in the MC Central panel. We're a kilometer out there, and there is literally no drilling in the area we've been testing off on the eastern extent. So extremely encouraging to see these signs of the system working so well as we step out a kilometer to the east. These assays, these holes are pending. I don't have assays on them, but what I can say is it shares a lot of similarities to what we see in the MC Central panel. So as a reminder, we have 13 holes pending. Many of those are within the central panel and host good mineralization. A number of those are step outs to the east, and several of those are also out to Aljo. And I'm going to migrate a bit on the property here, and the upper right map shows all the way 30 kilometers to the east. GFG controls the area in pink. The map in the central is really a compilation map of some of the historic holes. But what we see here is, 0.5 ounce to 3 ounce material over, 1, 2, 3, 4 meter widths. There's a historic mine here from the 30s. There's very good high-grade mineralization visible at surface and in trenches and in spoils. We have grab samples up to 300 grams here. So we know there's good mineralization here. These are generally northeast-oriented vein systems that were mined at very shallow depths historically. And we have 3 holes pending in here that were drilled in mid-December as well. Visuals on those look great. We've seen very encouraging vein systems, very likely to be tellurides, base metal mineralization, but also significant gold mineralization through these holes. assays pending on this as well. So I think when you stand back and look at GFG, you see there should be good continuous news flow, strong results on the back of what we published yesterday. And we think about the big picture here for GFG. And I like to do a little arm waving at this stage to say we put this whole land position together. It's 30 kilometers long strike. We did that because we felt the regional prospectivity was very high. Not just could we grow Montclair into something of critical mass, but I think there's more Montclairs out there across this land position, and it is quite highly underexplored. So we received 5 drill permits in December of last year, covering Aljo, covering the Pipestone break in the direct extension to the east of the Pipestone. And we also had the direct strike extensions in Montclair. So we received 5 drill permits. We're actively building the programs for some of these. We've already executed an initial program at Aljo, and we have pending results from it. So what you're going to see GFG do is to continue to build the pipeline of targets, continue to advance Montclair towards critical mass. And I think this land position is continually going to yield economic results in an area of high infrastructure. Now, that's what we published yesterday and where we're going with the Gold Arm property, which is east of Timmins. And the big picture, now you see where we're located. Literally 20 kilometers east of Timmins, along a highway, flanking a number of mid-tiers with infrastructure. I really still like what we have west of Timmins, the Penn and the Doré Gold Project. These are assets that are earlier stage. There's nothing that I would say that's going to advance a resource yet there, but they truly are regional scale land positions, 60 kilometers long strike, infrastructure running right across the property in terms of highways and electricity, railroad, and very high endowment. We're flanked by Newmont, we're flanked by Newcrest and IM Gold and Pan American. So I'm really encouraged equally by what we have at Penn, and we will find the right way to continue to advance Penn and Doré as well as take Gold Arm forward. A couple slides here that show some of the drill results from Penn. Look, we had some good high-grade hits, great scope to grow this yet, good geological and geochemical background in terms of the targeting layers that are there, and lots of drill-ready targets yet. How do they compare to Montclair and Gold Arm? I like Montclair and Gold Arm because we can readily drill and demonstrate continuity at a shallow level and see a quicker path to resource. So we're going to allocate the majority of our capital into Montclair and Gold Arm versus Penn at present. This shows Doré, which is the southerly of these two land positions. And as I said, this flanks Newcrest. It abuts the IM Gold land position at Cote Lake. So this is a formidable land position, 200 plus square kilometers in an area of high endowment and prospectivity as well. Overall, when we think about GFG's strategy for 2023, we really are going to focus on Montclair. We're extremely encouraged by what we've put out to date in terms of drill results and demonstrated continuity, high-grade hits. When I think about the Timmins camp, these are amongst the best results that are putting out in the camp by anybody. These are economic grades, they're high grades at shallow depths, and they're in a system that is underexplored that we think we can grow it. We think Montclair probably isn't the only system on this land position. Things like Aljo look great. We've already drilled them. We don't have the assays on them yet. Other greenfield targets across the belt are equally as compelling. So we'll continue to build Montclair Gold Arm pipeline, and we'll look for the right strategic paths for Penn and Doré, and we have lots of interest in them. I like them. I think they're a critical part to us. There's great value to be unlocked within them, and we'll continue to focus on Timmins as a whole. So when you think about GFG, I've talked to you about some of the best assets, some of the best drill results in Timmins to come out in the recent times. I do think we're on to a very relevant discovery at Montclair, and I think GFG has been correct in allocating its capital into a jurisdiction like Timmins. I think there's a lot more to be found here, and we're a technical team that's found ore bodies before, and we've got a track record of building good value for shareholders with good loyal shareholders that have supported us for the last 5 years, and we expect them to continue to do that. If you think about teams and optimizing exploration, you have to put the money in the ground in the drill bit, and this team does exactly that. I'm not going to spend as much time talking about the U.S. Side of things, but we also control the Rattlesnake Hills project in Wyoming, It's under option to Group 11 Technologies, and they're advancing ISR technology into gold, and we're leveraged through their success by ownership of both equity in them and the asset level. So overall, you have GFG as a district scale explorer. I've talked to you about a portion of our portfolio in Timmins where we're having great results, and introduced what I think 2023 is going to look like, a very busy drilling year, and what we think the drill results are telling us about both the structure and opportunity that exists in Montclair. So with that, I'll end my presentation and I'll turn it back over to Cam, and I'm happy to take any questions that anybody may have. Thank you.
Yeah, absolutely, Brian. Thank you so much. And as a reminder to everyone in the audience, if you do have any questions, this is the time. Please submit them in the Q&A chat found on the right-hand side of your screen. To get started, though, Brian, first question, how do you feel about the opportunity for the footwall zone continuing at depth?
When you think about controls of the footwall zone, there's the upper footwall zone, which we've modeled. And we already know there's lower footwall zones, and those are sitting sub-parallel to the upper footwall zone. They're established generally in the 200 to 300 meter vertical sort of search spaces, I call it, so just depth. So I think the likelihood is that you see repetitive footwall zones developed as that mafic volcanic unit goes to depth. And we've already seen good signs of that. There exists at least one more signs of a second more, which would mean 3 footwall zones. And I think I'm really encouraged by that. So to me, it's the combination of repetitive footwall zones going down that highly reactive mafic volcanic unit. And even when we've done the research 10 kilometers off to the east, 20 kilometers off to the east, what's really key for us is we're seeing that same chemistry of rock, that high iron, high titanium basalt. That's the reason the footwall zone is where it is. And it is continuous across large portions of our property going to the east. So depth extension is one thing to the footwall zone. I'm very optimistic we will find other footwall zones in that same stratigraphy going to the east, like we've drilled on hole 44.
Right. John wants to know if there's anything happening at Rattlesnake with Group 11 Technologies.
Yeah, Group 11, and I can revisit where they sit. Group 11 is a private company. They're focused on bringing the in situ uranium expertise and technology into the gold space. They have proprietary leach technology, which uses a triiodide ligand, a different ligand than cyanide, and hence they can use it in an in situ setting. So they've optioned the property. They're undergoing initial testing, which was testing of historic core. They designed a program, large diameter drilling, and that's really the next step. We're awaiting a proposal for 2023 for them from a budget perspective. I expect them to be drilling large diameter core this year and continue to move on that technology. Originally, we planned that for Q3 of 2022. It didn't get executed. There was a few reasons from the permitting side that didn't move forward in terms of 2023 and those large diameter ones. But I do think those are hurdles that we'll get through. And I'm optimistic they'll be drilling those large diameter holes and looking at the in situ angle in 2023 with GFG. And really, we think about this as legs to the stool. Group 11 provides some good leverage and optionality for GFG shareholders. I truly am committed to that technology. I think they can be successful. Penn and Doré and then Montclair, those are the 3 value builds and pillars to the GFG story.
Right. You used the term critical mass several times. Could you explain what you mean by that?
When you think about an ore body and reaching an economic threshold, there's certain fixed costs that you need to achieve to make anything economic. And that's really contingent on whether you control the infrastructure or not, the mill. And when I think about critical mass of an ore lens next to a mine within its infrastructure might be as small as 50, 75, 100,000 ounces might reach critical mass for that lens. As you start looking at differential mines, you're never going to develop a little lens at 75,000 ounces, or very unlikely to, because it doesn't reach critical mass. It doesn't have enough mass to generate enough revenue and enough free cash flow to fund the infrastructure. Now, when I think about critical mass where we are, we're surrounded by mills that have opportunity and feed to feed into other mills. And I do think that that controls your critical mass calculation. What do I think makes critical mass for where we are in Timmins? I think if we're looking at a small pit, you might get something that's, 1,000,000 ounces, and it still is valid and reasonable and economic to a party looking at it. If you're looking at it underground, you might be something as small as 500,000 ounces, higher grade, higher margin. You can float a ramp into it, and in that way. So the minimum critical mass I think you see is kind of 750,000 ounces to reach something that might start becoming interesting to a Pan American or to a McEwen or to an Agnico or a Newmont, given their infrastructure is right there. That decreases the critical mass required to make something economic. So that's how we think about the land position, why the infrastructure is so important for us. And if we can find something that's approaching 1,000,000 ounces or 2,000,000 ounces where we are, we think that starts getting interesting.
Right. Richard has a question. It's a bit in depth. So it is, what cash resources does the company need to execute its plans over the next 12 and 24 months relative to the 2 million in cash you have right now, or G has right now? Is there a need in the next 12 months to issue more equity to accomplish your plan?
The short answer is yes. When you think about a balance sheet and where GFG sits, we have $2 million going into Q4. We did some drilling at that point. Whether it's later into Q1 or early into Q2, you're going to see GFG raise some money. We've typically raised on the order of $3 to $5 million per year, and I think that's probably a path that we would continue on. Now, when we think about our timing to do that, as I said, whether it's Q1 or Q2, it's going to be one of those windows. I think what we want to do is to be able to continue to aggressively explore in Timmins. And if we talked about a budget, and it's not formalized yet, but what I like to see us spend is sort of $2.5 to $4 million a year in the ground. And I think what that does for us is allow us to continue to drill plus or minus 10,000 meters a year, start advancing this thing to scale and critical mass. And our G&A is about $1 million a year in terms of hard dollars. So that combined gives you sort of that $3 to $5 million target for raising a year. And I do expect us to probably raise that magnitude through 2023 as well. So just to give you some guidance on where the cash sits, where the cash requirements are, and what kind of budget we'd be looking at for this year.
Great. Paul wants to know what your cash position is right now. And a subsequent follow-up that he has is, could you also speak about assay turnaround times?
That would be about $1 million right now. So we can kick off drilling this year in Q1 of this year, which will start in mid-February. And what we want to do is get these drill results out to market, which are pending on 13 holes. We'll get the rig turning, and we'll find the right window in terms of capitalizing ourselves further. Sorry, what was the second question, Cam?
Sorry, I was muted there for a moment. Just about assay turnaround times and your expectations.
This is much improved. When I think back to 2022, at this time, we were seeing 7, 8, 9, 10 weeks in terms of turnaround time. Where we're seeing it right now is kind of the 4 to 5 week time frame. So assays that went into the lab before Christmas, we anticipate those to come back here in January, early February, and that's really what we're seeing. So I would say much improved over where we were last year, whether it's COVID, whether it's industry pace, personnel, not sure. But the proof is in the pudding. The labs have gotten a little bit quicker moving into 2023, and even we saw that late in 2022 as well.
Fair enough. Marius wants to know if you could walk us through a realistic share price predictions that you might have.
This is always, a bit of speculation. I would go back to our chart and thinking about what the logical drivers are a company like GFG's. So, we did publish some very, very good drill results in Q1 of last year. We moved up to in the sort of the 20 to 25 cent range. April rolled around last year. The precious metal space rolled over quite hard, and took us all the way back down to sort of that 12 to 14 cent range, and where we traded largely for most of last year. Bottomed out around 10. Now we've jumped back up. I'm optimistic that with continued positive drill results from Montclair, we should see that sort of 20 to 25% range. And what it does is you need to generate momentum. You need to do this over 2 or 3 press releases. What we put out today is the first one of several that are going to come out over the next few months. We also have a big marketing push doing both MIF in Vancouver and into Toronto. We have presence at Roundup, presence at PDAC, and a marketing push to really bring these results to the market. So I'm optimistic that these results will gain traction. There's the factors that are outside of our control. The market fundamentals of the TSX and the gold space are components that are out of our control. But as I started this presentation with saying, the fundamentals of gold price breaking out is a very positive sign. Everything in this space indicates that this rally may well have some legs to it. So when you combine the external factors with what we think we can drive internally, I think you can see, can we transform GFG into something that should be reasonably more a $50 to an $80 million company, which I would benchmark and say is what the valuation of relevant discoveries start to become. And that's not publishing a resource. That's the market recognizing this team is on to something that I think is valid, reasonable continuity, and reaches critical mass. And that's where I think you see GFC move to that sort of 50 to 80 million from where we are in the sort of 20 to 25. And then if you start proving economics and growing to a much larger critical mass, then you're in sort of that 1 to 150 mark where you're considered more a developer. So those would be the valuation benchmarks. We have 180 million shares out. So, optimistically, if we can transform Montclair or deposit into something that becomes a development stage asset, you should see this thing start trading in this sort of $150 million a share. That's a 10 bagger from where we were yesterday. So that's the type of value that can be unlocked if we continue to demonstrate at Montclair.
Right. How much more drilling is needed at the Montclair to get it to a resource stage?
I think we still probably have 12 to 18 months to really start to prove the continuity, to build the solid models, and to get it to something that's critical mass. No company wants to publish a resource that's too small or doesn't meet market expectations from a size perspective. Great Bear was the best example, never did need to publish it. All they needed to do was keep drilling step outs and keep proving the system's going to grow. And ultimately, that's what you need to do if you're onto something that's relevant size. So, I have little doubt that Great Bear would have crunched lots of internal models and known exactly what they thought the resource was, as well as Kinross would have done before they acquired it. So, that's the time frame before I think we would get comfortable with the characteristics and the spacing to drive an internal resource. And then it really becomes around scale of whether it's interest to publish that, or whether it's our interest just to keep drilling big holes and growing the system. Fair
enough. Are you aware of what and how the groups around the Pen and Door projects are doing?
Very aware. We keep close touch with our neighbors at Pen and Door. So whether you're talking about Newmont, going to the west of us at Borden, whether you're talking about groups that are immediately adjacent to us south of Pen, we have IAMGOLD as a new neighbor, very close with them. They actually abut the Penn property. Newcrest abuts the Doré property. We're a very strong relationship with Newcrest and close contact with them in terms of the drill programs in Penn. IAMGOLD obviously publishes some guidance on Côté and where the progress is. So when I think about the Swayze, which is the greenstone belt that hosts these two, it's an active area. It's host to a lot of mid-tiers and majors. And we're very keenly aware and keep fully up to speed on what our neighbors are doing.
Right. Are Alamos personnel looking at your core?
Alamos, great group of geos. Scott, Michelle, and Dean, their technical group are very, very interested in the system we're working on, reviewing photos with us, reviewing our thoughts and models, and understanding, from their interest as a shareholder, what does it mean? And so we're more than happy, and we fully keep Alamos up to speed in their technical group around what we think, what it looks like, and where we think we can take it. And I know that yesterday's press release was of interest to them, and little doubt that they'll spend significant time trying to understand what it means for us and may mean for them.
Great. Could you speak to what GFG's overall strategy is on advancing Montclair? Would you take it to production if you find enough ounces?
It's always the path of value and time. And when we think about, finding 1 million ounces at 6 grams, the value unlocked for GFG shareholders at 1 million ounces at 6 grams isn't building a mill in Timmins. It's selling that for several $100 million. And so it really depends on scale of the discovery and how far we take it and whether we're provided the time to achieve such. If we start showing this thing has scale potential and size, given the amount of infrastructure around us, I don't think we'll be building a mill. And the likelihood is that it wouldn't be in our interest to build a mill. There's already 4 mills there. So maybe it's simpler to buy a mill on the cheap, and as opposed to build one if it's consistent with our flow sheet or with a flow sheet that might work on our ores. So there's lots of strategic paths that may evolve. But what I can say is that the history in Timmins is that relevant discoveries get bought.
Fair enough. Well, listen, Brian, I want to thank you for having such a great presentation and a good Q&A session. Of course, I also want to thank everyone who's joined us today, especially those who have asked questions. But that looks like it's it. So before we wrap up, I want to pass things over to you for some closing remarks.
Awesome. Thank you very much, Cam. And thank you very much, everybody, for listening and the great questions. We're excited at GFG. Putting out results like this are really something that could drive the stock to new levels and translate GFG into a relevant discovery into Timmins. If anybody would like to spend some time, Mark Lepage, myself are always available on phone. We love talking to shareholders. The website's a great use of information. We also will have some presence at Mineral Investor Forum out there in next weekend in Vancouver, and also the Mineral Investor Forum in Toronto. Those are both great venues to get a chance to catch up with management. And we will also have some presence at Roundup. So if there's follow-up questions and interest, always reach out. gfgresources.com, the website, and our office here in Saskatoon, always available and happy to take any inbound questions. And I think I'll leave it at that. Thank you very much, Cam.